Welcome back to Stacks. This is the show for crypto investors. We talk about the biggest opportunities in the market. Today I'm joined by Murad. He gave one of the highest conviction Bitcoin bull arguments last bear market. I think we went up 10 or 20x after that. We're back in the same spot. Now you're building a new company. A lot to discuss, dude. Thank you so much for coming on. How are you doing?
Doing very well, man, and thank you so much for having me. I've been a long time listener, I think since like 2019 even. Been following you on Twitter, kind of listening to a lot of your interviews and stuff. So super happy to finally be here myself.
Nice, dude. Nice. You just made your comeback to Twitter recently. I think you took like a two-year break. That had to feel good when you say, I'm coming back online, I'm still bullish, and you get 7,000 likes, thousands of comments. I think I reached out to you that day and said, good to see you back. Had to feel good, man. Is it nice to be back?
Yeah, for sure. I honestly didn't even try to time it with like a local bottom or a global bottom or whatever. I just thought that like almost 2.5 year hiatus was plentiful, and kind of been working on new things in kind of new subspaces of our industry. So I thought it was time to kind of slowly get back in the grind.
You said when you came back that you still have no doubt that this industry, that crypto, will absorb all the money in finance. Let's start there. It seems like your conviction hasn't changed. As I said, last time you presented your ultimate bull case was with Pomp. This was a few years back, 4 years almost now. It was 2018. We were down 60 or 70 or 80% on Bitcoin and everything. And, you gave this case. Has anything changed? Is it slightly less conviction since we're higher, less upside, or still the same conviction in Bitcoin? How do you see it right now?
I think the probability is even higher now, honestly. And like I said, there's absolutely no doubt in my mind that cryptocurrencies as a space will overtake not just money itself, but also a lot of sort of modern day fintech, a lot of payment stuff, a lot of almost all of the banking functionalities. And as we are seeing in the last 2 or 3 years, most likely many different other industries that touch money in one way or another as well, right? So in terms of my conviction in the industry, it didn't shake whatsoever. So I think that the higher the price, or to be more precise, the higher the market cap of Bitcoin and sort of the entire space as a whole, the higher the chances of it succeeding eventually. Because market cap effectively is proxy for the amount of believers, right? And sort of if we were at like 0.5% global penetration back then, and we are at like 5% or 6% global penetration now, then in my mind, that's like almost a 10x improvement, not just in price itself, but also in the probability of success. I think I've said this many times before, Bitcoin is undergoing these boom and bust cycles. Really what they are is their attention cycle, right? And essentially every time it bubbles up, you get a new cohort of quote unquote students, so to speak. Most of them will have to go through at least one painful lesson in the bear market. That's happening right now. And eventually they will become they're the learners now. And in the next bull and the next bear, they will be sort of the people sort of passing the torch, people teaching people, sort of the zealots of the space, so to speak, right? The passionate spreaders. And I think this is just another cycle. I think sort of on the more sort of the realistic or red pill or black pill side of things, I think one thing that's become clear is that Bitcoin isn't so much an inflation hedge as it is a proxy for monetary expansion and contraction. Unfortunately, it looks like Bitcoin is even more sensitive to contractions than it is to expansions. But nevertheless, it is a proxy to monetary expansion, because it's still up hundreds of thousands, if not millions of percent since sort of the modern day concept of quantitative easing has started after the great financial crisis. So even though we have pretty much tapped prices that were seen in late 2017, super roughly speaking, and without going into low timeframes, I think this general area is going to like essentially be resistance flipped into support, right? So what was crazy euphoria in late 2017, early 2018 is going to end up becoming sort of the new base today, right? So hopefully max euphoria back then is max fear right now. And in my mind, it doesn't really matter. Like the exact prices don't matter. What matters is sort of the infrastructure and the applications and the number of users among like popular corporations and popular countries and popular and powerful funds and things like that, as we get more and more believers among those people, as well as on the retail side, in my mind is just an inevitability. Honestly, yes, there's going to be some cyclical dislocations and maybe some government interventions, but in the long run, it's simply a matter of time for this industry to succeed. Because if you compare, like I said many times before, you compare holding fiat, which is constantly dwindling, and you compare holding Bitcoin, which is constantly appreciating, like in the long term, then it's just a matter of time between sort of one balloon pulls the users from the other balloon. So, like I said, yeah, still a believer, probably even more so today.
One of the pieces you noted there was this idea people had, and people said a lot. They said it on CNBC. I've tweeted it as well and not really talked about the nuance, was a lot of people looked at Bitcoin as an inflation hedge. And so when they see inflation up in this last 6, 9, 10 months, and they say, why is Bitcoin going down? And now it's been a slight shift of, well, Bitcoin's probably more closely tied to monetary expansion. When the money supply increases, Bitcoin should increase. When the money supply contracts, instead of just tracking inflation, that's a really small nuance that I think people that are deep in Bitcoin, people that are deep in crypto understand. But I think that the average person still has looked at this cycle and said, inflation's up. This was supposed to be an inflation hedge. I'm losing conviction. And it's kind of tough to see, especially when we live in a world where central banks and governments around the world target 2% inflation. Their goal is to print more money. So long term, it's like nothing has changed. And as you said, your conviction's gone up. Is it frustrating at all to see, to kind of see some people losing conviction during this part of the cycle? It seems like it's very widespread this year, and my conviction hasn't shifted at all. I don't know why people are losing conviction. Do you have any idea on why that's happening?
Yeah, I mean, so by definition, most people of every generation get into the market at the top, right? By definition, because the top in prices represents the highest amount of attention, exposure, advertising, media mentions, etc. But unfortunately, it takes time to realize that maximum attention is the worst time to buy, and maximum fear is the best time to buy. And by definition, most people get in at peaks, because the peaks is like the point where you have the highest sort of fastest growth in a month or in a week, because of those like longest sort of green candles that you have on a weekly basis. And these things attract people emotionally. And people think that because of those sort of vertical movements, people think that they're late to the boat or whatever. They jump in only to see Bitcoin or altcoins, even worse, retract 80% or 90%, right? And I think, like I said, most people get in at the tops, and they almost have to go through this painful bear. And most people do actual proper research during this very bear, right? Like they say, most convictions and most sort of the best positions and the most knowledge is accumulated in a bear. And I think that to answer your question, the reason a lot of people are losing conviction is because they're underwater. On the second bullet point here is, admittedly, we are at a unique macro point where we are finally doing kind of serious quantitative tightening for the very first time since Bitcoin's existence. There was a brief period of that in 2018 as well, but it's clearly sort of more serious and more intense right now. That being said, I will say that I will also add like a third bullet point, the fact that Bitcoin has kind of been trading in extreme lockstep with stocks and other risk assets for like a number of months right now. And a lot of people are sort of having this sense of financial nihilism and disappointment that, oh, we've just become like a beta to NASDAQ or whatever, right? However, I remember vividly people having very similar emotions in late 2018 and early 2019. And very crucially, that Bitcoin bottom around 4,000 in late 2018 was actually the moment where it started diverging from stock market behavior. And I think we're very slowly starting to see glimpses of that here. even if we have another leg down in stocks and another leg down in BTC, generally, I think we have, sort of super roughly speaking, have begun sort of this wide, long, 5, 6 month rectangular bottoming process here. And so, honestly, I think like right now is the time to start accumulating for the next cycle. And yes, you need to keep a very sharp eye and a very sharp ear towards what's going on in macro. And that stuff has definitely been increasingly sensitive to BTC and the space as a whole. But regardless, I think right now is slowly the time to start accumulating.
How many more of these cycles do you think we have left where we see Bitcoin go on astronomical runs and the entire crypto industry go on runs where we do have everyone joining during the top? You do have the only thing media can talk about is crypto. Like there was a point this last cycle where CNBC they would work Bitcoin into every single segment. They'd be talking about Tesla and bring up Bitcoin. They'd be talking about tech stocks, bring up Bitcoin. It was like Bitcoin had more shows on CNBC than their normal equity segments. How many times do you think we do see these cycles where that happens and prices up so much and then we get these 70 or 80% declines? Like that's what's happened ever since Bitcoin's existed, but there has to be a point in time where this normalizes. Like when Bitcoin reaches multi-trillion dollars and is as large as gold, probably volatility shrinks. Like how many more of these do we have?
So a lot of the people, and this is like typical things you see at the bottom of a bear, they're saying, okay, it's like you can't get wealthy off of crypto anymore. This space is over. There's at most like one cycle left, or that last cycle was the last cycle. I don't believe that. I think we still have like 3 or 4 cycles left. Now they're probably going to get milder just because as the bigger an asset gets, the milder like its volatility becomes. But I still think there's 3 or 4 cycles left. And ultimately, I think there will be, so one of the cycles I think is going to be so crazy sharp that what I think the world is effectively undergoing slow hyperinflation right now. I think it's crazy because history knows like 10 to 15 examples of hyperinflation that have happened within one economy or within one country. People often bring out examples of Zimbabwe and Venezuela, Weimar Republic in 1920s, 1930s Germany. But what I think is inevitable is seeing a hyperinflation on a global scale. Now, this might come back to bite me in the ass and might sound a little bit sort of dark and controversial, but I think that global hyperinflation will probably be accompanied by like revolutions and violence, civil wars, revolts, outright war, famine, even probably, different kinds of energy and water crises. But effectively, but you can't run this sort of 500, 600-year-old fiat system without some kind of a pain at the end, right? And I think Bitcoin will arise after what I described to sort of become the next paradigm for the next 600 years, right? So that's what I think is going to happen.
It's curious whenever I see people kind of point to Bitcoin as an experiment and not understand that the fiat world that we're living in is also an experiment, and many of the currencies that these countries use aren't that much older than Bitcoin. I mean, there's some things that have only been around 20 or 30 years, and people say, how could a currency like Bitcoin step in here and fill that role? It's like, well, we just developed the euro not that long ago. We just created, a lot of the aspects of our own central banking system not that long ago. So it's funny how short people's memory spans are.
For sure, yeah. The current paradigm of fiat money was effectively embraced in 1971. Before that, it was fully or partially backed by gold in many different places around the world. But effectively, it was 1971 where it's essentially fiat money backed by nothing. Eventually, that breaks because that economic system, it cannot keep expanding without major crises, without sort of constant central bank intervention by way of expanding the money supply, right? And instead of that, now I'm no hardcore expert in Austrian economics, but people believe that in a world of gold and in a world of Bitcoin even more so, instead of having these crazy boom and busts in the stock and real estate markets, instead you're just going to have steady growth, right? And some people think that's emotionally preferable to these crazy sort of fear and a euphoria cycles.
Yeah, I think I've probably shaved a few years off of my own life by tracking this stuff now for the past 5 years,
Yeah.
both with Bitcoin's cycle and now now our own macro cycle with every other asset.
It reminds me of that meme, which is like it says the text says, "Oh, crypto is not that stressful. I'm only 25 years old," and then it's like an old guy in the background.
Yep. That's all of us, dude.
Yeah.
That's all of us.
Yeah.
So, Murad, we've just laid out what the future could look like. I'm trying to understand and forecast out. I also think we're close to a bottom for Bitcoin. Your thesis is kind of over the next 5 or 6 months, we're in this bottoming formation, right? It's a previous peak. We're at max fear right now. It's kind of acting as a floor. It looks like we're starting to diverge a little bit from just tracking stocks. And you've started sharing some charts that kind of add to your thesis there. You have one right here. It looks at Bitcoin's market cap versus the money supply growth. What is going on here with Bitcoin's market cap versus the money supply in the system?
So, like I touched on that earlier, I think it's clear by now that Bitcoin isn't so much a reflection or an inflation hedge, but rather it's kind of like an escape valve for monetary expansion. It's effectively an index of global M2 or global M3, which are sort of global money supply aggregates around the world. And if somebody very intelligent on Twitter, I actually saw them discuss something similar even before it appeared in sort of Morgan Stanley's thing. Essentially, the year-over-year growth chart of BTC and the year-over-year growth chart of the global money supply are effectively the exact same chart, right? They peak at the exact same times and they bottom at the exact same times as well. And we've seen that as early as 2013 top. We've seen that with the early 2015 bottom. Once again, we saw that again at the late 2017, early 2018 peak. We saw that again in the late 2018 bottom. And again, we saw that in late 2021. And this is effectively kind of like 6 out of 6 data points proof, effectively, to me at least, that Bitcoin is effectively proxy for central bank misbehavior, so to speak, right? But Bitcoin is effectively benefiting greatly when central banks are expanding the money supply. And it's also hurting greatly when central banks decide to step back and actually contract the money supply. Now, I'm among one of the few people, well, not few, I'm among many people who think that this quantitative tightening isn't going to last for very long. I think it cannot last for 3 or 4 years because that will risk sort of the entire system breaking. And I believe that there will be some additional easing policies that will be executed by central banks around the world once again in the next 2 or 3 years. So I think when they do that, that will be yet another sort of tailwind for BTC once again.
And if this relationship holds up, I'm trying to think out, if you were to put the two camps in probabilities, is it more likely that over the next 10, 20, 30, 50 years, that central banks continue to expand the global M2 money supply? Or is it more likely they continue to shrink that money supply? Like, what's the probabilities you would assign that they actually find a way to contract the money supply over the next 10, 20, 30, 40 years? I just think it's almost impossible. Like, it's part of the system. They target inflation. They have to keep the printing going. Right? Or am I just too bull-tarded to see the other side? I think there's no way they contract. This is the system we're addicted to.
So I'm totally on the same page as you. I think it's 95% chance that it just continues to expand. History, if it's any guide, I think has hundreds of examples of sort of proving your point, dating all the way back to the Roman Empire. And I think there's even earlier examples, but dating all the way back to the Roman Empire, when the Roman coin minters progressively used worse and worse quality metals when sort of minting their coins. And this is essentially, even though it's like much more opaque and obfuscated right now, but it's essentially the same thing that's happening.
I can't believe that they were doing that back in the Roman times. They were faking coins. They were doing a little bait and switch with the metals, even back then, man.
What's super interesting to me, and I'm a big fan of studying like human history, anthropology, sociology, things like that, is observing similar phenomena among civilizations that never talk to each other, right? So it's, for example, when you're studying like the different cuisines and stuff, it's very interesting how there's a dish which is like meat with bread and cheese in like almost every country, even though those like across time and space, right? And it just shows that humans as animals, they enjoy like that combination of like protein, carb, and fat hitting their brain, right? And I think it's the same thing because I talked about the Roman Empire sort of making their coins progressively worse. I'm pretty sure, I forgot which exact Chinese dynasty it is, but I'm pretty sure something very similar happened with sort of copper coins and iron coins in sort of the previous early period of Chinese history as well. And the reason I bring this up is effectively, once again, like many economists say, the political control over the money supply, it's like a drug, right? It's an allure, which is incredibly difficult for the user to stop because effectively that political control gives you free money, right? Literally free money at the expense of everybody else. And it's just something that is like very difficult to stop, to abuse.
Yep. And we still haven't found a way to stop. As you said, back in 1970, we go off the gold standard. Now that's it. Effectively, that was our way of changing out what we used to put in our coins or dollars. It used to be backed by gold. Now all of a sudden we do a little bait and switch and we say, just trust us. The dollars are still good.
For sure. And I mean, it's pretty clear that whoever the inventor of BTC is, he was a visionary who created this tool to precisely be an absorber of sort of bad monetary behavior in the world, right? So it's almost like garlic against the vampires, if you know what I mean.
Yeah, I like that. Oh man. Well, as Bitcoin does that, as Bitcoin bottoms over the next couple of months, who knows how long this chops around. I appreciate this. Someone that can come on, have this kind of conviction. I think it's at a time when a lot of people need it. Murad, you're also building something else during this bear market, which is another thing I love to see, not just keeping the conviction strong on Bitcoin and crypto, but actually building things. You're working on something new. It's called SFTX. Can you tell me about it? Because I just saw an announcement yesterday. A lot of investors I respect, a lot of the guys that have done quite well are investing in it. They're backing it. Looks like you're building something cool. What are you working on, man? What is this?
Yeah, for sure. So just kind of a small prelude. I've been quiet over the past 2.5 years, but I've been doing a lot of like DeFi, just DeFi using, DeFi research, DeFi. Essentially, I was a DeFi power user for the past 2 years and was always on the lookout for stuff to build myself together with my friends. Essentially, I'm building something called STFX, which stands for Single Trade Fund Exchange. It's what we call a social fi platform for short-term asset management. Another way to describe it is a marketplace for investable and fundraisable trading ideas. So people have been trying to do asset management on chain since 2016. Enzyme, which used to be called Melon, was a product that still exists, but they started working on it in 2016. And besides Enzyme, there have been like 15 or more products across Ethereum, Solana, and other layer ones that have tried to sort of build on-chain funds. Now, putting sort of that whole space is usually broken into two spaces. One is passive asset management, which is things like indices and sort of like different kinds of like portfolios that are passive, that are not actively managed. And the other side of it is active asset management, which is like discretionary funds on chain, right? Now, unfortunately, despite a lot of people, when sort of smart contracts and blockchains first sort of became popular, despite a lot of people thinking that on-chain funds is like a killer use case, they never really took off. The collective TVL of all the active asset management protocols right now is like 50, 60 million, which really isn't that much compared to other subspaces of DeFi. So we're doing something different here. If a traditional fund is a continuous portfolio, where usually in the context of crypto, that means somebody has 10 to 15 spot assets, and they're sort of rotating between them, as well as doing some discretionary derivative trading in the middle. What we're doing is, instead of having those like multi-year funds, we're building something which only lasts for a couple of days to a couple of weeks. And instead of it being a portfolio, what we're doing is unbundling that even further. So we're building these vehicles, which we call single trade funds. You can think of them as mini funds that go in and out of existence just for the duration of one trade, right? So it's literally just one trade, which sort of quickly fundraises, deploys, executes. There's some risk management in between. And then once that's done, the money, sort of whatever the P&L, whether that's a win or loss, goes back to the investors and the manager, right? So the reason I think on-chain funds have failed, and I'm not going to go through them all, is because there's a mismatch in the timing. A lot of the crypto natives are impatient, risk-seeking people,
Yep.
And they don't want to wait for years to figure out whether their sort of money's with the right manager or not.
Yeah.
Instead, we're building something that's a lot more short-term, and that's something that's a lot more compartmentalized. So this is like a super short-term overview. And if you want to learn more, do join our Discord where all the sort of discussions happen. One last thing I'll add is DeFi has kind of been undergoing what's called a voltification of everything movement since 2021. Some of the biggest examples are protocols like Ribbon and Friction and Katana, who've built vaults for option strategies. We've also seen projects build vaults for liquidity management, for yield farming, leveraged yield farming, etc. Now, most of these focus on yield generation, and most of these are sort of continuous in nature. But what we're building instead is these discrete directional vaults, right? So if you imagine a market map of all the vault-based DeFi projects in the space with duration on the x-axis and volatility on the y-axis, we're trying to occupy that top left corner, essentially build a product that is high risk, high reward vault. And so that's what we're doing right now.
That's fascinating. You know what it makes me think of off the bat is there's this whole sector of hedge funds called fund of funds, right? Where they raise a bunch of money and then their job is to go out and allocate that money to hedge funds that specialize in a certain thing. So maybe they put some money in this guy's long only tech thing. They put some money in this guy's beta neutral, whatever. But it's making bets with this pool of money. Effectively, I think, if I understand correctly, STFX would allow the individual investor, the individual crypto native investor, they almost would act like a fund of funds with their own wallet. Let's say I have like a Bitcoin or 10 ETH on my wallet. I can go out there and say, hey, I'm looking at this guy, this trader. He's done very well trading Solana. He just opened a new trade on Solana. I'm going to allocate a little bit to him. But I also want to be playing some of this DeFi strategy he's doing. I can do that. In a way, it's turning like every crypto native person, where you don't have to be a fund, into like a fund of funds with your own wallet.
Yeah, that's exactly right. I would describe it as a fund of trade, right? So let's put it this way. If a traditional fund is a molecule, we're trying to be an atom, right? And if a traditional fund is like a 10-minute YouTube video, we are effectively building the TikTok of asset management. So we want something that's like shorter, to the point, sharper. Instead of getting an exposure to like different ideas that a manager might have over the next 6 months, you are specifically investing in just one idea of it.
I'm sure you guys will build this out if it's not already, but I'm curious like how this will work. How will I be able to know if this one guy who just opened up a new trade is a good trader? I'm sure with their wallet, you track their previous trades and I can check their history on chain. Like, how does that work? Will there be a ranking system?
Yeah. So that's a great question. I actually think that because we're doing trades and not funds, it lends itself to a lot more specific sort of profiles, analyses, leaderboards, and sort of dissection of people's behavior. But every single sort of STF creator, you'll be able to see their win-loss ratio, total amount of profit or loss on the platform, average win, average loss, average risk reward, average STF duration, and many other parameters as well.
That's fascinating, dude. How do they make money then for opening the trade? Let's say I go open a new trade on STFX. I like ETH here. I give the reasoning why. I think we're, long until X amount. Do I make money when people then allocate money to my trade, or is it just how does that work?
Yeah, that's exactly right. You would make 20% of the profits.
Okay.
Yeah. So it's essentially, you can think of it as exactly as a regular hedge fund, but instead of lasting 3 years, it's going to last a week.
That's so freaking cool. When is this thing going to be live? I've seen some pictures. I think there was a sneak preview of what this is going to look like, what the interface is going to look like, how I choose trades. I saw that flashed on Twitter, but when can I start using this?
So we're going to be launching gradually. In early August, we're launching what's called our guarded testnet. I'll be sure to send you the link, hopefully for around 200 people to get sort of early waves of feedback and feature requests and things like that. After that, we'll have more wider testnet open to everybody, as well as a testnet competition. And then after that, we'll have sort of a alpha mainnet. And then after that, we'll have just full proper mainnet. And each of these stages are going to last 2 to 3 weeks.
Beautiful. Appreciate you coming on, walking through why you still have conviction. If anything, it's gone up, and people need to look out for what's happening with STFX. What's the best way to do that? You mentioned they should check out the Discord. Is there any timeline that they should be on the lookout for, or any updates you have coming they should be aware of?
Yeah, so I think Discord is the best. Twitter is the second best. And a lot of announcements coming early to mid-August. So we are really prioritizing our early community members, both for core team spots, all kinds of perks, and future sort of liquidity and performance management stuff that we got in the pipeline. So just join our Discord and participate in discussions there.
Good stuff. Glad to have you back. Thank you so much for coming on the show. It's needed at a time like this when people are losing some hope in Bitcoin. I still have all the conviction in the world, but I hope more people can see it the way that you do. Murad, thanks for coming on, man. Hope to chat soon.
For sure. Thank you so much for having me, man.